by the way, as we're beginning this live scan, I do want to mention, whether you're using chart patterns or not, whether you're using Autochartist or not, the concept of having an appropriate entry or having an appropriate tool or trigger for particular market cycles translates to any trading approach. If you take nothing more from our talk here than, okay, what's the underlying market cycle and what am I going to do at those particular decision levels? I realize that for some people that might be a breakout. For some people it might be a short. For some people it might be nothing, right? Realize that what we do at certain prices is dictated by what we perceive the market to be doing. And how we will react to that, I think, many times for people who don't have a good foundation in cycle analysis, becomes very much a random thing. If they're trend traders, the whole world is a trend. If they're momentum traders, the whole world is a breakout or a breakdown. If they're contrarians, every move higher is an opportunity to short. If they're reversal traders, everything is, turning over and they want to get in on, So my bottom line is you can trade up and down markets, sideways markets, reversals. You can do all that. Those are all valid ways of playing the market. But knowing when to do which is the real key. That's the problem. People find one type of strategy, or they find one type of chart pattern, and they think that the minute they recognize the pattern, it's time to go ahead and execute it. And that couldn't be further from the truth. I also want to add, and I probably should have mentioned it earlier, if you have a pattern that is not a good pairing, as we were mentioning earlier, the 15-minute and the 30-minute Aussie US dollar alert, those are both triangles. And we mentioned that the underlying market cycle was not appropriate. Let me ask you something. If I were to not use the word chart pattern and just say support and resistance, is this just a chart with some support and resistance lines drawn on it? Downtrend line is resistance and uptrend line is support. These are dynamic levels, so they're dynamic support and resistance. Aren't these just support and resistance? The extra step that we're taking, calling it a chart pattern, is something that we're imposing on the market, or imposing visually on this chart. But in reality, all it is the support of an uptrend line and the resistance of a downtrend line. So let's say I don't have good underlying market cycle pairing. Is this alert a waste for me? Absolutely not. Because what Autochartist also does, I won't say secondarily, but it's probably a side benefit, is I've got these downtrend lines and uptrend lines I can actually use. So if this 30-minute chart of the Aussie US dollar shows that I'm in an uptrend, I could use some of these lines and levels as individual dynamic lines and levels. I don't have to treat it as a triangle. This is just some support resistance recognition for me, isn't it? So don't forget, even a pattern that we don't necessarily think is a good pairing could still be of use to us. Here's a 60-minute continuation triangle on the US dollar Canada. Now, this particular pattern happens to be a good pairing. So if you take a look at a 60-minute chart of the dollar Canada, and the market memory for a dollar Canada is 2 weeks on the 60-minute chart, or a 60-minute chart is 2 weeks, period. And you take a quick look at what it's telling us here, you'll notice that the market cycle is sideways. So once we've got that sideways, and it's fairly fresh in terms of its sideways confirmation. So once I've got that sideways confirmation, you can see here it's fairly fresh. Okay. Once I've got that confirmation, what I can now say is there's a good pairing, and I can go about setting up what could be a momentum trade, a breakout breakdown trade from a fairly fresh sideways market. Realize it is not solidly established. It hasn't been moving sideways for very long. Okay, but nonetheless, the market cycle has transitioned to what we would identify as either an accumulation or distribution cycle, a sideways market cycle. It's visually confirmed by that sideways direction on my wave. So now I know I could utilize this uptrend line and downtrend line, the dynamic support and resistance, and play what's known as a momentum trade. In other words, I'm going to look for breakout or breakdowns from the confines of this pattern. And in a momentum scenario, in a sideways market, the price could go either way. It could break out, it could break down. I'm going to have to be ready for either. That's the way momentum cycles or momentum trades work within a sideways market cycle. But again, having the triangle is not enough. I need to have the market cycle that supports it. And quite frankly, having the market cycle alone is not enough. You need some decision levels from which you can set up a trade.